I don't really care if I get stopped out. I really, don't get me wrong, obviously when I'm here in front of you guys, it's nice to have a winning trade, but in the grand scheme of things, if I'm going to take 30 trades, what's realistic as far as having winners and losers? I know realistically I've got to be expecting at least 10 losers out of 30 trades. So once you get over the whole trying to be right all the time, it becomes less important. What becomes important is making sure that you're not losing too much on those losers, so you're not over risking, and that you're on your winning trades, you run your winning trades to appropriate target levels. And then if you're doing that, you're making money. I'm generally right about 50 to 60% of the time, so as far as win rates are concerned. So just so you know, if I'm only right 50 to 60% of the time, that means I'm not right 100% of the time. And so I do have my fair share of losing trades. Where I make my money is on risk to reward. And you can do that. I've got one of my traders, actually, he's only right 38% of the time, and yet he's doing really well. He said, do you know what? He said, he's got this strategy that it just has a very high win rate. And he said, I know I have to put up with lots of losses. He said, it's much more profitable. He said, I've tried running it with lower targets, and so therefore it hits profit target, so it has a higher win rate. He said, it's less profitable when I have that. And that's often the way. You're often more profitable having a lower win rate, but having big risk-reward trades when they come along. But I know for a lot of newer traders, that's it, that you have to develop a thick skin with trading. So it's not always easy for newer traders to just do that. Paul Tudor Jones, who is one of the world's most famous fund managers, and he was famous because he was, well, for many reasons, but he was in the original Market Wizards books. If any of you have read Market Wizards, if you haven't read any of the Market Wizards books, you really should do, because they are timeless classics, interviewing fund managers who have had extraordinary performance. Anyway, he would always say, just because a market stops me out doesn't stop me from then wanting to go, taking another attempt. And sometimes it will take him 5 attempts before he'll get that run.
Hi, this is Alessio Arstanian. Thank you very much for watching this video. If you like this video and you'd like to see more videos like this, then please remember to subscribe to our channel and like our page. And you can also visit me on my website, leadingtrader.com. Thank you very much.